All right, so I told y'all that I was actually looking at the EURGBP, right? So I'm actually starting from the monthly time frame. So I already have my monthly key levels set for this time frame. And then if I drop down to the weekly, this is where I have that key level highlighted with the rectangle, right? So currently this is what I'm looking at. Okay, so I'm looking at how the weekly candles has respected that monthly key level, and then we have the transition from bullish to bearish. Okay, so we have our bearish variation alongside here, our bearish engulfing candle, our bearish variation to our right side, which is current price. Okay, now another thing too, before we actually got that transition, that breaker structure for the bearish formation, if you look along this side here at the bottom where we found our support, where the weekly chart did find its support, if you look to the left, this has also been a very, very, very good weekly key level. I'm sorry, a monthly key level, and that weekly time frame has respected that key level. So yes, it attempted to break below that key level. However, it only tested this level. Okay, so this red line is actually the weekly support. It never broke below this weekly support. So it tested this monthly key level. It closed below, but it never broke through this structure, this weekly structure. So it never gave us that bearish structure. It attempted to, but it didn't. Okay. So we have our high from this side here. Let me go ahead and mark it up. Both of these are high points here. Okay, because the weekly time frame only came back to retest this high, but never broke above it. So we have our high here. Okay, we have our high point here, our higher low. I'm sorry, we have our high, our lower high. I'm sorry, our high, our low, lower high, lower low, lower high, lower low. The market came up here, gave us our higher low here, right in this area, our higher low, higher high, and our high, because this high is not higher than this high. Both of these highs are the same. Okay. Now, since the market came back to retest this previous high, the market then gave us our bearish engulfing, broke down, so it gave us our bearish transition. Then we have our new found level of support, which is our lower low. Okay. Our new lower high, actually our first lower high from this high. So our lower high gave us a lower low, but could never break below this area. So actually I can just leave this here, that. right? Or I can leave it here. So the market did struggle to break below this low point, okay? And this is over a course of weeks. That's probably like a month there. But we have March, April, and then it says May. Wow. Yeah, that's pretty good. That's a long wait, but overall, like, we do understand exactly what's going on. Okay. Then we get our bullish engulfing candle, and then the market creates its high. So the market continued to go on this bullish formation. Finally got our level of support. I'm sorry, not level of support, but the market did go up here, gave us our uptrend to the monthly key level, and then it then transitioned over into our bearish formation. So we got our bearish engulfing candle. Then if you look here, we do have where this weekly, not the current week candle, but last week's candle did retest this previous bearish candle here. Oh, I don't have to make it that far out, but okay, so I'll zoom in. Okay, so as you can see, the transition has already occurred. So we do see here where the market still has not been able to break above that monthly candle. Okay, so that's a very strong indication that we can 9 times out of 10 go into some sort of bearish transition. Now, when this candle here closed bearish, the next candlestick also closed bearish. So just by looking at this candlestick here, I already know that the market did come up to retest. Okay, gave us a retest here, and then started to create lower highs and lower lows just based off the wick. Okay, actually just based off the candle itself, and which will also of course include the wick as a whole. And if we look at our current candle, weekly candle that we're on, you can see this candle had also attempted to sort of break above this new found resistance level, okay? Because this candlestick, this bearish candlestick, has been our support level. Once this candlestick closed, that following week candlestick did also close bearish, but it did come back to retest this previous weekly candle. So once that candlestick closed, now looking at this weekly candlestick, we can definitely expect a retest and then a continuation of bearish movement. Why? Simply due to the fact that we have not been able to break this newfound resistance. Okay, so this would be also a key level. Wow, and I didn't even see that just by looking at that. So just by looking at this, we can see here, this will be a weekly key level. And I'm doing this analysis as I'm actually recording. So this is great. So we have our weekly key level. Yeah, price did play did play a major role on resistance prior to our bearish transition. Okay, that looks nice. However, we're going to drop down to our smaller time frames, because once the market created that bearish engulfing candle, my next price projection, I'm sorry, not price projection, but my next step into analysis, my next confirmation that I'll be looking for would be lower highs and lower lows. Okay, because I'm looking for a downtrend, so I'll be expecting a retest to the upside. So I would expect for the market to create some sort of higher lows and higher highs. And then once it finds its new level of support, its new level of resistance, I do expect for the market to continue to the downside, which would create lower highs and lower lows. And I'm just looking just based off this transition here, this bearish variation. So now I'm going to drop down to the daily time frame. Actually, wait a minute. If I'm look here, okay, this will also be a newfound level of support. And if we look to the left, boom. I mean, even if we were to drag it over, we can still see where price, boom. Okay, just look at that, boom. So price respects those rejection areas. Okay. The reason why I'm not highlighting this is because this is like what we're currently on, and I don't want it to be like a big block on the screen. So I just would do like the previous price. You know, I highlight that pretty large. Then the key levels, I'll go ahead and mark that because we're not in that area there, but this does give us confirmation. So when I drop down to the small time frames, it's not like we're looking at a coloring book, you know? So now I'm going to drop down to the daily, right? I can zoom out a little bit, actually zoom in a little bit, okay? Now, sometimes if the market looks a little too noisy for me, or if I can't understand it, sometimes I'll just like, I have this one EMA, this one period EMA on my chart sometimes. So this way I can see like I can identify the lower lows, the lower highs, the higher highs, and then the higher lows. It just helps me with my analysis. So if you see me go back and forth with that, like if you see that line thrown behind the candlesticks, just know that that's my that's just pretty much like my line chart. So it's pretty much like I'm going from candlestick to line, and then from line to candlestick. So instead of me switching back and forth, I'll just throw that EMA on there and I keep it on there. Okay. So in this area here, like I probably wouldn't have been able to identify like the real like low point. So I'll just throw my line chart, my lines behind the candlesticks, and going from like left to right, of course. So over here we have our low point. So the mark, I'm actually just gonna start from here, right? I'll just do it from here. So we have our low, we have our higher low, we have our, no, I'm sorry, my apologies. We have our low, we have our higher high, we have our higher low, we have our higher high. I'll still call this a low because due to my line chart, this is due to my line, this is what I'm seeing here. So we have our higher low, then we have our high because this high didn't pass over this high, and then we also have our, let's see, this low. No, this low is still higher than this low, so this would be a higher low as well. And then we have our higher high. Now, since this low right here This is just a daily time frame. So each time frame does have its own definite support and resistance. So I'll make this. Let's see. What we could do here. You know what? I'll do it right here. Actually, bring that down a little bit. Okay, and I'll make that a different color. Since red was for the weekly, I'll do blue for the daily. Okay. So this is what I have here. And then we have that higher high. The market then threw in a doji, therefore our next candlestick was bearish. The day after bearish, the day after that bearish. So we have a bearish engulfing, I'm sorry, not engulfing, my apologies, bearish variation here to the downside. And then finally, the market did close below this previous support area. Okay, so it did close below that previous support area. So now what I will do is drop down to the smaller time frames, because I want to see if those smaller time frames will definitely respect this candlestick. Okay, so now that the candlestick did close bearish and it closed below that previous support, I would highlight this here. And like I said, this is all just like projection. So after each candlestick has closed, mind you, I haven't thrown on like any fibs or anything like that. It's just straight price action. And then I like throwing a fib. So this is like just straight price action. Because sometimes, like, if I throw in a fib, sometimes I don't even like really catch that whole move. But no, that's ugly. But I'll still throw it on there. Still. Oh, what I'm doing? Okay, here we go. Sorry about that. All right. So that candlestick did close bearish, and it did close below that support area, that previous support area. So now I would highlight that area and then drop down to a smaller time frame to see how price will respect that area. Okay, not necessarily respect the area, but see how price move in that area. So just based off that particular closing candlestick, I would expect to see lower highs and lower lows on smaller time frames. So like a continuation of that, a retest, of course, and then a continuation of lower highs and lower lows, because I want to be able to get into the sell. All right, because right now market did go ahead and close below this candlestick, did close below this previous support area. Okay, now I mean, of course, there's many opportunities to catch the sell within these previous daily candlesticks, but me, I like to wait. Like I grew that patience to the point where I could wait 3 or 4 days to get into that move, because I'm like, I used to wait like the freaking 2 weeks for a paycheck. So I was like, look, I could wait 3 or 4 days for a good 1K or $1,500 or 2K day, or even if it's just like $600 or $700 or $900, like I'm okay with that because I understand like the lifestyle that I live. So I want to be able to be more like have more confirmations than to just come to the chart, look at this, and just expect for it to go down. Just expect for it to create those bearish formations. So now that I've seen that this candlestick did go ahead and close below this support area, that previous support area, I'm going to drop down to a smaller time frame, right? Because the reason why I'm not throwing a fib on here as of yet is because, let's see, we haven't got that bullish candlestick next to this bearish candlestick. Okay, so that's why I'm dropping down to smaller time frames, because I want to see how those smaller time frames make up for this new daily candlestick. Okay, so that's what I'll do now. I'll drop down to a smaller time frame. 4 hour will be next. Okay, so mind you, this right here would be that 4-hour break of structure. So I'm just going to this low. It's about the same. Okay, so this low and this low is literally the same. Let's see. Actually, I could use this low. Yeah. Nah. I like this low better. I can use this low, but I'm not liking the way that's looking. No, I could still use this low. So I'll use this one. All right. So I'll use this low here. I use red. Let me use, oh, not that green, ugly. Use this green here. Because as I stated, like I still use the line chart. Like, okay. So I still use my line chart. So yeah, I would use this low here. Because this would be that higher low, because this low is higher than this low. Okay, so it's just like those really, really fine details that definitely makes trading, make your trading career very, very exciting, Now, if we look here, just without even adding those candlesticks, see how the market did create a high, okay, because this high, actually, this will be a lower high though, because this high isn't higher than this one. So the market did create a high, a higher low, and then a lower high here. Okay. And then the market broke this previous higher low, which was that previous support level, created a lower low, came back up, so it created a lower high, and this would be that retest. So whatever variation we have here, that would be our retest. And I'm sorry if this video is kind of long, but I just want to, like, you know, point out the things I've been seeing since I've been home. So whatever's here, of course, we'll have that transition. And then if you look, the market went on. Okay, so let me go back to our candles. Okay, and if we look here, this is where we have that bullish candle. Then we have that bearish candle, but this is not an engulfing. So I would have never took that, but we do have our bearish variation. So I would have took that. Okay, so if we zoom in right here, this isn't a bearish engulfing at all. This is not a bearish engulfing. But if I were to drag this here, we see that we have our bearish variation, which would be a confirmation for me that this market is going on a downtrend. And then also that candle did come back to test. So we have, you see the 2 wicks here, the 2 wicks did come back to retest that previous support level, which is now our newfound level of resistance. Okay. And just by looking at it, yep, the 4-hour candlestick did break below here in this area, so it created an alert for me actually. And then our next candlestick closed bearish, retested actually, and closed bearish. The next candlestick closed bullish. So actually I would have, yeah. So I would have actually got in after this candlestick. If I was trading from the 4-hour, yeah, I would have had some drawdown, but that's what we have our stop loss for. And I wouldn't been, I'm sorry, yeah, I would have been in some sort of drawdown, of course. That's why we have our stop loss. But knowing, following structure from the higher time frame, I would have probably had like maybe a 10 to 12 pip stop loss set. All right. So what? Oh shoot! You know what? Never mind. I ain't even play around with that. I do not want to mess up my lines. But definitely a 10 or 12 pip stop loss, because I'm following everything from the monthly time frame. Okay. And I would actually throw my fibs on. Excuse me. On here. Market did find support. Here. It's a little Came up to that 50 price reversal zone. Okay, came back down, came back to the 50. Well, actually, this went all the way up to the 70.7%. And that would be on a smaller time frame, but it actually closed below the 50 EMA. So all of the candlesticks did test other price reversal zone, but they never closed above that 50 EMA. Okay. And then if you do trade the fib extensions, you can add that on there. So what I'll do, I'll add that on there. And I believe the 50 PRZ price reversal zone would be 200. And that will be right here. So that will be your take profit only if you're trading from, only if you're using like your fib expansion levels. But let me double check. Just give me 1 second. Then I really be feeling like Q when he be doing his webinars, and he's always like, give me a second, and then it'd be so quiet. Yep, so I was correct. The PRZ level for the 50 EMA, I'm sorry, wow, the 50 PRZ. So the TP for that on the fib expansion would be the 200. So I was correct. So I'll just make a little line here. And the market actually went to that level. So I'll make that, let me see. I'll make it yellow. Okay. So if you held that trade, you could have gotten out down here to the 200. And the market still went down. Oh, yep, the market still continued to go down. But just for the sake of just trading it using the fib expansion, the 200 would have been your take profit. All right. But of course, like still following like market structure, you could have still continued to ride the, ride the sell down, because it still continued to go down until it found the level of support down here. So I'll remove that out the way. Okay. I'll also move that out the way. So now that we're in this sell, all right, everything else after that would be us controlling our emotions and maintaining our trade. All right. We could have continued to ride this wave, continue to ride the wave, kept going and following our support and resistance, our newfound support and resistance level, and kept following market structure. market structure, market structure, market structure, market structure, market structure. That's all I've been hearing like this whole time since I've been on this video. Market structure, market structure. And then of course dropping down to our smaller time frames to see what is being done on the smaller time frames that are creating those candlesticks for the higher time frames. All right, and then now looking at current price, I do see here where the market has had a hard time closing below this previous support area. I'm sorry, this current support area. Okay. So it closed below, but never gave us a retest to continue our bearish movement, our bearish variation. So now what I am expecting for price to do, I am expecting just by looking at this, oh man, okay. I was trying to make a lower low here and then a low here, but I'm gonna get it right soon. Hold on. All right, so we have our lower low here and then our low point, because this low is still within this low. Yeah, like it's still closed in that range. Yeah, tested candles. And then the market gave us after this low point, after our low formation, the market did create a lower high here. No, actually the market created a higher low, because we have our low here, right? This is the lowest point. Our low, actually our higher low. And then we have our no, wait, let me make sure I'm saying this right. Okay, we have our low here. Trying to move this over, that's my thing. This be the low. This will be our lower high here. So let me write that. Oh, damn, Trinice, really? Because this high is actually lower than this high, like, without even second guessing. And on the smaller time frames, we could get more in detail with it as well. And then we have a higher low here. So this would be our higher low. Okay, you know what? Stop tripping. No, I'm gonna move it over here. I'm just move it. So this is our higher low, and then this is our low, right? So lower high, higher low, because this low is higher than this high. The market did break this previous lower high, and then now we have another higher low point. Okay, so we had a higher low here. Now we have a new higher low, and we have a higher high here. So it's like really, really like those details plays a really good role. So right now we're just awaiting to see what could possibly go on, right? And now I'm just going to drop down to my candles. Okay, so now we're to the candles. We can still see it clear here. So I'll just draw my little trend line. Test it, test it, test it. Test it. Tap. Tap here. Tap, tap. Tappity tap. All right, so we have that key level. We see the key levels here. So price is always going back to those rejection areas where price was being rejected. Okay, so if we zoom in, you can actually see it. Okay, this key level started over here, and more than likely it even started before that, but just for the sake of current price, where price is at right now. I mean, if I were to zoom out, probably see it somewhere over it. Yeah, right. Nope. Almost. But we won't go all the way back there. But yeah, so this is where price is at. So now on smaller time frames, make that there. Okay, I'll make that blue. Then make it blue. And now I'm just seeing here if we're going to create another higher low point, or if we're going to create our first lower high since this higher here. Oh, what I put higher low? No. That's not right. Not for this one. This one is not a higher low. This is a higher high. My apologies for that. I thought I changed it. So this is a higher high because this high is higher than this high. All right. So now I will drop down to the smaller time frame. Okay, so we see from that forward chart, we still have our high point here. We created the 1 hour chart did create this bearish movement. So this here would be a lower low. This would be a low. But due to the fact that we're using our time frame correlation, this is what we're getting, right? So I'm seeing how the market actually respects between our high point, our high, and our higher low. Actually, I don't even know why I took that off. No, put that back on. And our higher low from the 4 hour. Okay, because everything adds up. And I'll just put 4 hour next to it, so I know exactly where I got that from. So this way I can respect those smaller time frames. So the market did give me a newfound level of resistance. This will be my newfound level of resistance on the 1 hour chart. Like you see, like every time frame has its own resistance and support, and that's a huge factor, right? So I'm gonna make that purple, and then make this one purple as well. I mean, we could keep going down, but I could just put this here because that support area still has been respected on the 30-minute time frame. So the market can give us a lower low, or it can give us a test here to this newfound resistance level, give us a bearish variation or bearish engulfing, and it could possibly come down to this newfound support, or simply just break through it. So break market structure, break the structure on this 30-minute time frame. Like either reject price here and send us to the upside to test this resistance level from a higher time frame, and then come down. So I'm just waiting. Like right now, it's like a waiting game, trying to figure, exactly which way it could possibly move. But overall, I'm expecting bearish movement. Yeah, that's what I'm expecting. But I'm just going to wait for sure, because I don't want to get too crazy with it. but I'm definitely following what's going on with the chart. All right, so that's just my analysis. Now, it could give us, actually, it could probably give us, yeah, it could probably give us a lower low, and then maybe another price rejection to the upside. Then give us a bearish variation or bearish engulfing candle to test our support area here. And I believe this one is from the daily. So I think this is from the daily time frame. Yeah, I believe this one is from the daily or the weekly. This is definitely a key level. And then send us up. Send us, I'm sorry, not up, but send us on an uptrend. So I'm just following market structure for forever and forever. But that's what I have for now.